Hello, everyone, and welcome to the WTO's press conference for the release of the annual trade forecast. We're happy to have with us today Dr. Ngozi Okonjo-Iweala, the new Director General of the WTO. To her left, we have the WTO's Chief Economist, Robert Koopman, and to his left, we have with us Senior WTO Economist Coleman Nee. We will begin with an opening statement from the Director General. After Dr. Ngozi finishes, I will give the floor to our Chief Economist, Bob Koopman, and then after that, we will take your questions. Our senior economist, Coleman Nee, is also here to help with your questions on the forecast. We will take questions via Zoom, either through the raise hand function if you wish to ask questions out loud, or in the Zoom Q&A box if you wish to pose a written question. Please be reminded that no information from the press release or this press conference can be published before the embargo lifts at 5 p.m. Geneva time. Without further ado, let me turn the floor over to the Director General, Dr. Ngozi.
Well, thank you, Daniel. And good afternoon, everyone. I want to welcome you to the release of the WTO's flagship annual trade statistics and trade forecast. Of course, this is my very first participation in that event, and I want to thank you all for being with us today. Let me just start with the story of the container ship that blocked the Suez Canal for nearly a week. We all saw that hundreds of ships were backed up in a traffic jam. Others went around the Cape of Good Hope, adding considerable number of days and costs to their journey. Estimates said that nearly $10 billion of trade was being affected each day. The fact that the Ever Given was able to cause so much disruption is a sign that global merchandise trade is relatively robust and that global supply chains have held up through the pandemic. The word relatively is important. The volume of world merchandise trade still contracted by 5.3% in 2020, but this contraction was smaller than initially feared. Following a sharp decline in the first half of the year, trade recovered more quickly than expected in the second half of 2020. This rebound has continued, and the WTO's baseline trade forecast foresees an 8% increase in the volume of world merchandise trade for 2021. Trade growth is expected to slow to 4% in 2022. It's important to note that this would still leave trade below its pre-pandemic trend. COVID-19 continues to pose the greatest threat to the outlook for trade. New waves of infection could easily further undermine any hoped for recovery. The rapid development of effective vaccines has given the world a realistic chance of stopping this disease in its tracks and jump-starting the world economy at the same time. But this opportunity could be squandered if large numbers of countries and people do not have equal access to vaccines. A rapid, global, and equitable vaccine rollout is the best stimulus plan we have for the strong and sustained economic recovery that we all need. Ramping up the production and deployment of vaccines in all countries will allow businesses and schools to reopen more quickly and help economies get back on their feet. Depending on how quickly we can bring the pandemic to an end, trade could either see a major resurgence over the next 2 years, or it could experience a weaker, more prolonged recovery. Accelerated vaccinations would allow containment measures to be relaxed sooner, which could raise trade growth up to 2.5 percentage points above the baseline forecast in 2021, returning trade to the pre-pandemic trend. On the other hand, if supply shortages continue, or if vaccine-resistant strains of the virus emerge, trade growth could end up 2 percentage points below the baseline forecast. Overall, we believe that the balance of risks to the forecast is considered to be on the downside, but upside potential exists if countries make wise policy choices. Large monetary and fiscal injections in advanced economies helped prevent a bigger downturn last year, a major factor in why growth and trade have both outperformed projections from last year. But these support measures will not be enough to bring an end to the crisis. Only by ramping up production of vaccines and making them more widely available can we hope to get the world economy back to full speed. The possibility that many countries will be left behind as we emerge from the crisis is a major concern. Despite the broad-based nature of the global economic recovery to date, there are signs of divergence in trade flows across regions. If the current WTO forecast is realized, exports from Asia at the end of 2021 will be 10% higher than they were in 2019, while most other regions would see smaller increases or modest declines. For example, exports of Europe and North Americas would be steady, while shipments from Africa and the Middle East would be down 4% and 3% respectively. The import side would see declines in South America, minus 3%, Africa, minus 2%, and the Middle East, minus 6%, while Asia, plus 5%, and North America, plus 7%, would increase, reflecting the relative strength of their economic recoveries. In this context, a rise in protectionism would be damaging, not just to global economic growth, but to vaccine production as well. Manufacturing vaccines requires inputs from many countries. As we've all now cited and heard many times, one leading COVID-19 vaccine manufacturer says that their vaccine needs 280 components sourced from 19 different countries. You can see how complicated the supply chain still is. Trade restrictions would make it even harder to ramp up production, leading to more unequal economic and health outcomes. The WTO has helped to keep trade flowing during the crisis. Now the international community must leverage the power of trade to expand access to life-saving vaccines. Thank you.
Thank you, DG. I'd now like to pass the floor to Chief Economist Robert Koopman for some brief opening remarks.
Thank you, Dan, and thank you, Dr. Ngozi. As you all can tell, this has been a rather challenging year for global trade. It's been relatively resilient, as Dr. Ngozi expressed, particularly compared to GDP growth in many countries. So in that way, I think it's fairly safe to say that trade has done relatively well. There's been significant concerns about export restrictions and policy measures being put in the path of trade and slowing its growth, but overall it's been relatively robust. And I think that says something about the underlying the foundation of the WTO and the agreements, in that members feel restraint in invoking measures that might impede trade. Now, should they feel more restraint? Maybe. That's up to them. But overall, it appears that trade has been providing a strong underpinning so far for a potential recovery. As Dr. Ngozi said, it's very important that vaccinations proceed apace globally, not just in select geographic regions, and that also trade finance should be made available for those countries and firms that are feeling the financial pinch from the financial downturn as a result of the pandemic crisis. Overall, I think we'll see trade start to return to a more normal path after 2022, although 2022 is probably a reasonable recovery. Much will depend on what happens to global GDP, and we'll have to see governments and the private sector taking steps to ensure that the recovery is strong and balanced. I'll stop there, Dan. Thanks.
Thank you, Bob. We will now go to questions. Dr. Ngozi has an engagement, so she will take questions for the next 15, 20 minutes or so before she has to leave. Both Bob and Coleman, who have worked hard on this forecast, as they do every year, will be available to take questions until the press conference ends at 5 p.m. Again, a reminder that no information from the press release or this press conference can be published before the embargo lifts at 5 p.m. And again, if you wish to ask a question, you may do so either through the raise hand function or in the Zoom Q&A box. Once we call on you, your microphone will be opened and you'll be allowed to ask one question and one question only. Please give your name and the media you represent. So our first question goes to Bryce Bashuk of Bloomberg. Bryce, you have the floor.
Hi, thank you. Can you hear me okay?
Yes, Bryce, we can.
Great. So this question is for the Director General. Director General, what's
I'm sorry,
the
Bryce, one
thing
second.
governments
Dr.
should be
Ngozi,
doing right
here.
now to get their economies back on track? Thank you.
Oh, I see.
Okay, Bryce, if you could start again, please.
Sure. What's the number one thing that governments should be doing right now to get their economies back on track?
Bryce, thank you for that question. Can you hear me?
I think he can.
He can hear? Okay. I think the number one thing government should be doing is very simple. And I alluded to it or said it in my statement. I said that the best economic stimulus that can help us recover quickly is access to vaccines. So I think what governments should be doing and are doing is trying to solve the health problem by getting access to vaccines, therapeutics, and diagnostics. That would be the number one thing. You can't really talk about the economy rebounding when you still have the health issue around.
Thank you, DG. We now have a question from Sarah and Arup of Politico. Sarah, you have the floor.
Yes, thank you very much. My question is related to the meeting that Dr. Okonjo-Iweala, you're going to have with vaccine producers as well as other stakeholders. What concretely do you hope will come out of this meeting, and how can this support the third way that you're talking about? Thank you.
Thank you very much, Sarah, for that question. The meeting that we are planning to have in 2 weeks, I hope will lead to, first of all, us listening to what the problems the manufacturers have with the supply chain with respect to export restrictions or other bureaucracy or trade facilitation issues that they have in which the WTO members can be useful. So it would be good to hear directly from them so we can take action. As you know, actually members have tried very hard to lower these restrictions. There were 150 restrictions in 90 countries. Now we're down to 59 countries only that are taking such measures, but we could do more. That's why we are listening to them. In return, one of the main objectives of the conference is to have the manufacturers look at the issue of expanding manufacturing capacity for the short to medium term and the long term. In the short to medium term, how can we turn existing capacity in emerging markets, in developed countries, but also very much in emerging markets and developing countries, turn that into to producing COVID-19 vaccines? We need a better distribution of manufacturing facilities in the world. And we have to start now. And then for the longer term, they should also look at how we can invest more evenly all over the world, so we never have to encounter this problem of the concentration of vaccine production in particular countries. I'm sure that if developing countries and emerging markets had had a better distribution, we wouldn't have encountered the kind of demands that we are seeing now. So that's one thing. We hope to get a better idea of where this can be done. And then finally, hoping to discuss with them some issues of a framework for the longer term. I think for the next pandemic, we must not go through this again. No longer can we expect poor countries to stand in a queue waiting to get vaccines. I mean, the fact, as the WHO DG said, that 70% of vaccine doses today have been administered by 10 countries. The inequity of access is glaring, and this cannot happen again. So we need a framework for the future of how we are going to handle the issue of the TRIPS and the TRIPS waiver, what kind of arrangement we can come to that will allow developing countries the access they need to both vaccines, but also manufacturing capacity, whilst also incentivizing research and development. Thank you.
Thank you very much, DG. We will now go to a written question in the Q&A box from Assis Valor of Brazil's Valor, excuse me. And I think this is more for our economists, Bob and Coleman. Assis notes that in the last projection, the end of 2020, WTO said South America and Central America could have a 5.4% increase in exports in 2021. Why now are you only predicting a growth of 3.2%? Is this because of the situation in Brazil? And how could the Brazil being the epicenter of the global COVID outbreak impact its international trade this year? Thank you.
Assis, thank you for that question. So the revision has much to do with the global economy and the relationship between trading nations and the composition of the kinds of goods that countries trade. So Brazil is adversely affected by the virus, but it's also affected by the impacts of the virus in countries that it trades with. And so the ability of Brazil to export is weakened by poor performance or relatively weaker performance in other countries, and depends much on the composition of Brazil's exports. Brazil exports a lot of commodity products, agricultural products, which, by the way, agricultural products have stood up fairly well in global trade over the past year. But other products going into manufacturing goods have been weaker, and we expect that weakness to continue through 2021 with a slight recovery, but not back to what it was on trend. So I don't know if Coleman wants to add to that.
Yeah, I would add that also Brazil, South America exports a certain amount of oil, not as much as Africa or the Middle East, but it's still a significant fraction of its oil exports. And those regions have suffered stronger declines in 2020 and relatively weak projections for 2021, in part because of the reduced demand, because of travel restrictions. There are fewer flights and there was less commuting also during the pandemic, with people working from home increasingly. So reduced demand for energy products is one factor. Thank you.
Thank you, Bob and Coleman. I'll now give the floor to Philip Blenkensop of Reuters in Brussels. Philip, you have the floor.
Hopefully you can hear me. Thank you for the news conference. I wanted to ask, there was an allusion at the start of the presentation to the Suez Canal blockage, and I wondered, I realize it's only fairly kind of recent and it's not entirely resolved, but do you have a kind of estimate of the impact of that, whether it be on, whether it be kind of billions of dollars or even sort of percentage points of global growth?
Yeah, Bob, Coleman, would you like to take that?
Sure, Dan, thanks. So I think it's important to keep the Suez Canal trade impacts in perspective. The estimate generated by other folks has been about $10 billion per day. That's about 20% of global daily trade. However, that's not lost completely. So that trade is delayed, and we often assume in trade cost work that economists do that on average, 1 day of delay is about 1% of the product value. So you would take 1% times that, say, approximately 10 billion as the additional trade cost. Now, that delay affects trade, raises the cost of trade, but it doesn't reduce trade value totally by the $10 billion is the point. It delays it, but it doesn't eliminate it. But there are knock-on production effects that will affect GDP. And there are some estimates out there that something like the Suez Canal holdup could affect, I think it was 0.02% of global GDP. So a very small number of overall GDP. Bigger impacts on overall trade in terms of the delays, but the trade cost calculation, as I said, would be about 1% per day times the number of trade by the amount of trade delayed. But then the knock-on effects are more complex. And as I said, for overall GDP, it turns out to be a relatively small number.
Thank you, Bob. We now have a question from Richard Hio of Les Echos in France. Richard, vous avez la parole.
Yes, can you hear me?
Yes, we can, Richard.
Okay, thank you for the organization of that press briefing. Good afternoon, Dr. Ngozi. Good afternoon, Mr. Koopman. I was wondering, in your data, can you see any major change in the organization of the supply chain worldwide, kind of reshoring worldwide? Did you notice that?
Thanks, Richard. What we've seen so far in the data has been what we call trade diversion, not so much reshoring. So you might see some nearshoring, but generally what we've seen is trade diversion. But that was much more related to the trade conflict rather than COVID-19. So COVID-19 has seen changes in trade flows much more related to the GDP performance in countries, and the composition of that GDP performance. So if a country had significant services as a share of GDP and a significant share of proximity-related services, the impact on its economy was greater than for economies that had smaller shares of services and proximity-related services. And then fiscal stimulus matters a lot. And so how much countries or governments are spending on stimulating their domestic economy. We see some countries spending a lot. That's stimulating consumer demand. There's shift away from services towards some, say, office-related goods and other kinds of goods that are easily tradable and in demand despite the lockdowns. So there have been these complicated shifts in the composition of GDP, both its growth and its performance. That may have had some effect on the patterns of trade, but they're not particularly enduring, is my belief. And as I said, from the previous trade conflicts that we'd seen much smaller impacts on overall trade and GDP growth and much more impacts on trade diversion across countries with very little empirical evidence of reshoring.
Great, thank you very much, Bob. I'll now take a question in the Q&A box from Hans van Lovenen from the Australian Financial Review. Hans asks, he asks our economist, in the Excel sheet attachment, China increased its already sizable exports by 4%, but barely any major economy increased its imports. Where did China's exports go? Was there a long tail? Or are these self-reported figures which don't necessarily match up?
These figures are reported by the individual countries, but they are official statistics. The United States and Western Europe and other advanced economies employed a certain amount of fiscal stimulus and monetary stimulus, which maintained domestic demand and also demand for imported goods. So perhaps the declines in imports were less than they otherwise would have been. China continued to supply a large portion of the world's supplies of medical equipment and surgical masks, among other things, during the pandemic, while other economies were neither producing nor importing much. So overall, I think that you'd see that if you tallied them all up, the imports from countries other than China would have declined more than exports. And so China, it would balance out. These figures, you'll notice that there was an 8% decline at the global level on both the export side and then the import side. So overall, these appear to have balanced out.
Thank you very much, Coleman. We now have a question from John Zerakostis. John, you have the floor.
Yeah, I didn't realize that Dr. Ngozi is gone, but anyhow, the other two gentlemen on the podium are just as good. And firstly, on your projections, what is the downside if this projected fourth wave in the US picks up momentum, and also the third wave in Europe also picks up momentum, and all indications are that's where it's heading?
Okay.
In our first chart on, we showed an upside scenario and a downside scenario for trade. And the downside scenario would cover that eventuality, but things could be outside of this range if developments were even worse on the pandemic front. It could also be outside of this range on the upside. These are just assumptions about a particular scenario that might occur, but if developments were even worse, it could be outside that range. It could also be outside the range on the upside. It shouldn't be interpreted as a range. It should be interpreted as alternative scenarios that might unfold.
Thank you, Coleman. Also, we have in the queue Maya Plents from UN Brief. Maya, you may ask your question now.
Thank you very much. Yes, my question is regarding the comments that are made regarding the vaccines that are central to the recovery. So, and I would like to know in what shape and form do you see that happening, and what needs to happen, what you recommend countries should be paying attention to? Is increasing manufacturing, or what other measures they could take, policy measures that would make that happen?
Okay. Well, I think Dr. Ngozi addressed the main issue, which is increasing production and ensuring that production is widely distributed globally. But there are a number of trade-related issues that can help facilitate increased production. And that would be things like removing export restrictions, should you have them in place, particularly for vaccine-related components and potentially vaccine delivery-related components, reducing any export restrictions or tariffs you have on therapeutics, and then investing in ensuring your logistics capability can move the increased volume of vaccines that you've trained folks to deliver the vaccines once they're delivered to your country. So there's in fact, if you go to our website, you'll see we have a vaccine supply chain diagram. If you Google or search on WTO.org COVID-19, you'll find we have a supply chain diagram that I think explains all the steps from research and development through delivery to the shot in the arm, and there's a large number of steps. And one of the things that we hope to get out of the vaccine production workshop that Dr. Ngozi is organizing is to hear from the private sector where they see their supply chain constraints in a great deal of granularity, so that governments and the WTO can assist in identifying those choke points and try to reduce them and make sure that existing supplies can be expanded and delivered more efficiently. And then there's the longer term solution, investing in know-how and production capacity globally. So Dan, thanks.
Thank you very much, Bob. We now have a question from Stefan Resius. Stefan, are you online? Stefan? We'll have to get back to you, Stefan, if you could just raise your hand again, please. In the meantime, we'll take a question from Agnes Pedrero from AFP in Geneva, and she's submitted her question in writing. Agnes says, I want to know if the 8% figure for 2021 is linked to a 100% people vaccinated world. And if not, if that is not the case, what would the percentage be?
The 8% increase, the baseline scenario, it assumes a certain degree of progress, but I mean, these are not our assumptions. We essentially adopted consensus estimates for upside and downside scenarios, as well as the baseline forecast. So part of the projected GDP growth comes from expectations that vaccines will be disseminated around the world at a particular rate. It certainly won't cover the whole global population in 2021. Developing countries in particular are going to take a number of years to have their entire populations inoculated, if that is even possible. It will come at a great cost, and also there'll be a good amount of time involved. So in any case, the upside scenario would involve a faster rollout of vaccines. The downside scenario would probably involve new vaccine-resistant strains of COVID-19. But in either case, these are sort of positive scenarios that might occur or not. But I wouldn't say there are very, very firm predictions in terms of the dissemination of vaccines linked to them.
Thank you very much, Coleman. We have another question in writing. It's from Xin Ling of Xinhua News Agency. And Xin Ling asks the following. According to Chinese official statistics, in the first 2 months of 2021, China's foreign trade expanded by more than 40%. What are the WTO's prospects on the trade recovery trajectory this year in China and in Asia? How and to what extent do you expect China can contribute to the global recovery in the short and long term?
Okay, so our projections show a strong recovery in Asia for 2021 in terms of exports, up 8.4%, and China's a big driver in that. We also see a recovery in 2021 in imports in Asia, smaller than the increase in exports. So part of that is Asian economies exporting consumer goods that are benefiting from significant demand side stimulus in the United States and Europe and other developed countries. That's that's a big driver in those trade gains, and that 40% that you described for the first 2 months may reflect exactly that. In fact, this big recovery in Asian exports to the advanced economies, Europe and the United States, is causing a number of supply chain challenges for shipping. You've probably heard that there's an imbalance in the allocation of shipping containers as the increased flow of exports from Asia accumulate those containers in the United States and in Europe. And it's expensive to take empty containers back to Asia. So there are, and that doesn't include the challenges around the Suez Canal. There's also been long lines for offloading at large ports as offloading labor has been adversely affected by some of the health restrictions, and the distribution from the ports inland has been delayed. So there's a number of supply chain challenges that are much more commercial in focus rather than, say, WTO policy in focus. Coleman, do you want to add anything to that?
Yeah, I would just like to add a rather technical point, but I think it's important. China, well, actually Asia, but China is a big driver of trade in Asia, saw actually a modest increase in 2020, 0.3%, while the rest of the world was, other regions were declining, North America 8.5%, Europe 8%. And because of this lower base, you will get, an 8% increase in 2021 is going to be off of a higher initial base for China. On the other hand, for Europe, an 8% decline followed by an 8% increase is actually going to leave European trade flows below where they would have been. It's a technical issue. For instance, if something were to fall by 50%, to fall by half, you'd have to have a doubling to get back to where you were, which is a 100% increase. So the growth rate in 2021 will depend to a large extent on how deep a hole that the regions were in the previous year.
The other thing is her statistics might be nominal.
Oh, yes. Oh, one other point is that these forecasts are for merchandise trade in volume, that is real terms. It does not include services. Services were badly hit by the pandemic, but we don't have an ability to project them in volume terms because of the lack of unit values for services trade. On the other hand, countries like China will have seen a probably bigger increase in exports in goods because the rest of the world was importing Chinese goods disproportionately.
Thank you very much, Coleman. I have one question again in the Q&A, and I will apologize in advance for mispronouncing your name. This is from Dike Onuma Waeze. I hope I got that right. And Dike asks, what is the WTO's projected economic growth for Africa in 2021?
In 2021, we have an estimate of 2.6% GDP growth, but this is GDP at market exchange rates, not at purchasing power parity. GDP weighted at market exchange rates tends to have a closer correspondence to trade flows. That's why we focus on that. At market exchange rates, it would probably be a little higher, but 2.6% is our projection for 2021. But Africa declined by 2.9% in 2020. So that would leave Africa's GDP still quite depressed, and growth should accelerate to 3.8% in 2022. So.
If I could add, you'll note that Africa's decline in 2020 was smaller than many other regions, and that has to do much with the composition of the African economy, and that the health-related restrictions affected proximity-related services, and that had a much bigger impact on those economies that are largely service-driven. Those kinds of services driven.
Thank you, Bob and Coleman. We don't have any new questions, either through raised hands or written. However, we do have 4 people who previously asked questions with their hands still raised. I will ask those journalists to check and make sure that they intend to ask another question, or if you do not intend to ask another question, to please keep your hand down. And I've seen one has disappeared already. So I'll assume everyone else is interested in the second question. So a second question from Bryce Bashuk with Bloomberg. Bryce, you have the floor.
Hi, thank you. This question is for Bob Koopman. Bob, the report mentions the impact of rising public debts. I'm interested to know what kind of impact you expect from President Biden's new $2.25 trillion infrastructure proposal. What effect will that have if that's signed into law? Thank you.
Thanks, Bryce. I'm not sure about the debt aspect of that. As I understand it, it's a $2 trillion infrastructure plan, and they plan to pay for that in taxes, increased taxes on businesses, corporate taxation, and wealthy households, is my understanding. But that's what I've read in the press, Bryce. But the economic effects, I think, are pretty clear. There's a demand side to it, in that spending will be spent on things like concrete and asphalt and increased R&D, improving infrastructure. So there's this demand side aspect, but then I think the intention, as I understand it, is to have it have long-term supply side effects and to try to turn around some of the long-term degradation of U.S. infrastructure, which essentially increases the cost of doing business. So my sense is that perhaps the Biden administration sees this as having some initial demand side effects, which is likely to spill over into the trade channel, which this most recent demand side impact from the American Recovery Plan has done. But I think they see it as a longer term investment in reducing the costs of production through improving infrastructure and know-how and capabilities.
Thank you, Bob. John Zarakostas, you have your hand up for a second question. I will give the floor now to John.
Thank you. Dan, can you hear me?
Yes, we can, John.
All right, yes. Coming back to this planned workshop on between pharmaceutical manufacturers and the WTO, will that only include manufacturers from the private sector or also state-owned manufacturers, which there are quite a few around the world, to get a big picture of where it's at globally? Can you elaborate a little bit on that, or is it just going to be the brand manufacturers?
Bob, are you in a position to handle that one?
I'm in a position to give some insights. So the final program isn't finalized yet, but it aims to be inclusive. So I think in the end, we'll be hearing from all the potential sources of manufacturer that at least representative of all of the sources of manufacturing. So it's not just the private sector.
Thank you, Bob. We have about 10 minutes until the press conference ends and the embargo is lifted. I have a raised hand from Paula Dupraz-Dobiaz from Swiss Info. Paula, you have the floor.
Yes, thank you very much for taking my question. I just wanted to know, to get a few more details on Switzerland's performance last year, as well as what you forecast next year. I noticed in the table that you distributed that it was, one of the leading exporters last year that actually performed well. And I'm just wondering, well, especially from Europe, and I'd like to know what sort of forecast you may have for Switzerland next year and why as well.
We only publish regional forecasts, but I mean, Switzerland is its share in world services trade and merchandise trade are considerable. It's I don't have the statistics at my fingertip, but in brief, the answer is we don't have a forecast for Switzerland per se. We produce estimates for individual, for the EU, for the UK, for some other countries, but then we aggregate them up to Europe. And so we don't have a forecast for Switzerland alone.
Thank you, Coleman. We have a question in writing from Sulin Tan from the South China Morning Post. And the question is, do you have a sense of what sort of goods will top China's increased exports this year? And what will top the US's increased imports?
No, our forecast is for total merchandise trade. But you can see that China has been supplying a lot of the goods in 2020 that demand held up quite well for. For instance, medical supplies, textiles rose significantly, and part of that is surgical masks. Then there's also electronics, which China is a major exporter of, and because of increased remote work and businesses making allowances for working remotely, there's been a lot of upgrading of equipment in that regard. So China is still has its important position in all of these products that for which demand has remained strong in 2020 and will probably remain strong as we exit the pandemic.
If I could add to that, if you look on page 8, chart 4, you'll see year-on-year growth in world manufactured goods trade. And as Coleman was saying, you can see there where there's been a relatively strong growth for a large number of commodity sectors, weak growth in others. I think China produces a lot of travel goods and handbags, and that was weak, and footwear was weak. But you'll also see that toys, games, sports equipment, textiles, integrated circuits, computers, precision equipment, and those things were strong in the third and fourth quarters, in particular, October and particularly in the fourth quarter and in October, November, and December. I think what you'll see is that it'll be hard to sustain that kind of imbalanced growth. And if we do see a more broadly distributed recovery and a return to proximity-related services consumption in places like the United States and Europe, so when we can go out to dinner and go out to shows and things like that, again, that instead of spending money on, computers and pharmaceuticals and toys, games, and sports equipment, that will shift more of our expenditures towards those non-tradable consumable goods. So I think you'll see a rebalancing there. So I wouldn't take that chart and just project it forward, but it does tell you that many of the places where China seems to have a comparative advantage have done relatively well this past year.
Thank you, Bob. We will go back to a second question from Maya Plentz of UN Brief. Maya, you have the floor.
Thank you, Daniel. My question is for Dr. Koopman. Can you comment on trade in digital services, what the data shows in the forecast?
Well, thanks. It's hard to define trade in digital services, but it's embedded in lots of the services. So travel, it's hard to do digitally, and you'll see that travel is pretty much hit hard. But other commercial services have done reasonably well. Commercial services have not done as well, but things like transport and travel, where less of the direct delivery of the service is digital, keeping in mind that behind the delivery of those things, there's a lot of digital activity going on, data moving around the world. But other commercial services and I think financial services and
Financial services and computer services are
are
part of
other commercial services. So, and financial services and computer services are pretty digitally intensive. So they've done relatively well compared to the change in GDP, which is not, and that's another thing we haven't pointed out, is that trade has done relatively well compared to GDP, compared to what happened in the great financial crisis in 2008, where the trade decline was many multiples of the GDP decline, whereas here the trade decline has been about what, two and a half?
1.6 to 1.
1.6 to 1, yeah.
We had I'll, oh, sorry. In the financial crisis, in 2009, trade fell roughly 6 to 1, 6 times as much as GDP fell. This year, earlier in the year, we had predicted a decline of about 2 to 1. Back in October, it ended up being about 1.6 to 1. So not as negative as we had thought. There are a number of reasons why that might be. There was probably a certain amount of income shifted towards consumption of goods because households couldn't consume services. And there were a number of other reasons, but also stronger GDP growth projections. But it's, yes, anyway, I'll leave it at that.
Thank you both. We have a little more than 3 minutes left until the embargo is lifted and the press conference ends. I will note that we again have hands raised by those who have previously asked questions. So I will ask those to check and make sure that they do not want to ask another question. And I see a few of them have disappeared already. We have time for maybe a few more. I will let Paula Duprois-Dobias from Swiss Info have a second shot at it. Paula, you have the floor.
I'm sorry, I didn't realize that my hand was still up. I'm very sorry.
No worries. Okay. Bryce Bashuk, third shot. Bryce, the floor is yours.
Thanks so much. This question's either for Bob or Coleman. What in the data did you find most unexpected or surprising in 2020 that you may not have been able to predict this time last year? Thank you.
Was difficult to predict. Pretty much everything was difficult to predict. At this time last year, we did not have reasonable GDP estimates from any sources to produce our forecast. We generated our own based on a couple of different scenarios, an upside scenario, a more positive scenario, and a downside scenario. In the downside scenario, we had world GDP declining by more than 8% and trade basically collapsing. But very quickly, it became clear that that was not the scenario that was unfolding. And so in June, we issued an update saying that trade was only going to fall about 17% peak to trough, and so we were probably in the more optimistic scenario. By October, we were predicting a decline of about 9% in world trade. At the time, I believe the consensus estimates for the GDP decline for the year was about 4.8. It ended up being less than that, 3.8. And also the peak to trough decline was smaller than we had anticipated because of data revisions. Those were estimates, and to about 15% rather than 17%. Together, these collectively produced a smaller decline for the year. Because of the sharpness of the recovery, we had a very steep decline. Peak to trough, it was comparable to the financial crisis. The difference was the financial crisis was more of a prolonged, it took a number of quarters to start to come back. This was just down and back up. Yeah.
Bryce, I'll add to that. I think the biggest surprise for me was the illustration of the importance of aggressive fiscal and monetary policy in helping to mitigate the adverse effects of the GDP declines on trade, well, on GDP and trade. And I think you reflect back to the great financial crisis and the hesitation around the size of the stimulus and provision of liquidity. And it makes you think that that was a big mistake. If they had had aggressive fiscal and monetary policy responses in the great financial crisis as we saw here, I think we would have been in a much different world than what we experienced in, say, the last 10 years, 12 years.
Thank you very much, Bob. It's now 5:01 on my clock. The embargo has been lifted. So, and this is also the end of the press conference. So I would just like to thank Dr. Ngozi, who had a previous engagement and had to leave for that. Thank you, Bob Koopman and Coleman Nee, for taking part in this. We appreciate your work on this and taking the time to answer questions. I would just like to note that tomorrow we have a press conference at 12 o'clock Geneva time with the Director General, with France's Minister of Economy, Bruno Le Maire, and with France's Minister Delegate for Trade, Franck Riester. So with that, I will wish you a pleasant day and thank you again for your participation.